All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So, markets having another green week here, pretty much across the board. So, S&P was nicely up here, and we got right through these levels here that we have drawn in. So again, upsloping trend line going back to December, as well as this kind of pivot low area from April of last year. Now we're kind of into this little chop zone. There is another level right at 450 just above that. Obviously the FOMC rate decision this week, Fed pausing as expected, that was priced in. Jerome Powell's press conference, essentially, he came out fairly hawkish, although markets not really caring. And again, we talked about this last couple of weeks here with, it's really just the power of put decay, right? So you buy puts on the way down. If those puts start to go out of the money, dealers start to buy back. And that was very evident here in regional banks, very much so lately, as we have noted. But in any case, spiders holding up here. And again, right through that big 440 level on the SPY, the triple Qs did make it all the way back to this level here in March 2022 here. So right around that 370, 372 handle. It also coincides with the 7.5 retrace. So markets here, again, very extended, very overbought, much higher than I thought that they would have gone here. But again, credit to the bulls here. And that's the power of short squeezing and short covering and put decay. Now, right now, we do have a position here where there is a chance for the bears to make some moves, and they haven't really had any windows at all lately. But now we're starting to see that positioning, that sentiment start to change, right? So if we take a look last week and this week, AAII, it's a good investor sentiment survey. That jumped by 50% last week, and it jumped a little bit higher here on the bulls and the bears dropping. So again, we're seeing kind of positioning change. Take a look here as well. CTAs, hedge funds, retail, asset managers, ETFs, all at extreme levels here going back to 2016. So really take a look at that spike there on the chart. So really going to an extreme level here. And this is kind of what we've talked about here, what the market needs in order to really sort of squeeze out and create that window of opportunity for bears. It's like I've been saying, it's kind of like we're closer, this type of move here, if we flip back over, is more closer to, I think, a blow off top than it is a healthy move. You need to have backing and filling. You need to build supports on the way up. And that's not what we're seeing. But now we're seeing position, we're seeing volatility sort of become unpinned here a little bit. And that could potentially create a window of weakness for bears as you lose those puts. People are covering their puts. We have June, we have quarterly OPEX out of the way. So now there is sort of a window here. We'll see if the bears can take advantage of that. Again, none of the fundamental problems have been resolved. The market is still, it still looks like we're headed for a recession. I know the people will say, well, we priced in a recession. That's never happened in history. We've also never put in a bottom before the 3-month and 10-year yield curves have inverted, which is something that would have happened or would have had to have happened here if this market is going to push to new highs. But in any case, that's neither here nor there right now. In the near term, what we're going to watch here is, again, we'll take a look on the Qs. Again, we're just watching the 7.5 retrace. Can we get a reaction off that? We're certainly extended. We were extended into the 618 and they pushed it right up here. I think now that you have June OPEX out of the way and you have kind of that narrative change, you have more bulls than bears, right? It's, you had way too many bears down here. It's apparent we had too many bears here in March. And now it's looking like the boat is tipped to the other side. So again, just things to keep an eye on here, but this is the big level I'm watching on the triple Qs. On the spiders, nothing to say we can't push up to 450. And you might say, well, what about the Qs? If the spiders are going to go up to 450, then the Qs should be able to push through that 7.5. Not necessarily. You still have laggardship here from the IWM. You still have, XLI, industrials, MATS, XLB. These are sectors you could even get a bid from financials here. XLF, XLV has been hit. It got a little bit of a bid lately, but it got hit into May. So these are some sectors that could start to see a little bit of money flow, whereas tech starts to cool off, right? We've talked about this. you know, pretty much ad nauseum. You know, it's basically 7 stocks. It's like a 7 stock rally here. The Magnificent Seven dominating the S&P 500, and as a percent of market cap, basically at an all-time high, and that goes back to really right before the top, right? So 2021. Late 2021, November 2021, that was when the Qs were topping out. You know, the Nvidias, the Teslas of the world, they were topping out. And by the way, right now, that positioning is even more concentrated because now you have rebalancing, right? So end of month, Nvidia, Tesla, the market cap increase in those names alone are significantly going to increase in, for instance, the S&P and the NASDAQ. So again, it's these ETFs here, the spiders, triple Qs, they're even more concentrated now. So if you get a correction in these names, it's going to act as a dead weight, as opposed to before, where the rest of the market was flat to negative, and 4 or 5 stocks were bright green, and that's just pulling these indexes up. So something to consider here. But again, those are the levels we're watching there. So watch that 7.5 right in that 370 area there on the triple Qs. If we take that out, or if we, I should say, if we come back down to the downside, you will have support around 350, and then it's really all the way down to about 330, right? There's not a lot here, and you could make a case to 320 as well. And you might say, well, how could the Qs can't fall that far? I mean, they went that far up in, we're talking April 24th to June 12th. So it's, 6-7 weeks here that we do that, and we usually take the stairs up and the elevator down. So don't think that can't happen. And honestly, if you're bullish, you want a correction. So again, things to consider here. Again, for the spiders, watch that. If you break below this pivot here, it's likely you're probably headed back to at least 428, and then really you've got that big gap there at 422. I think the big level is around 418, 420 for the SPY. So those are the levels that we're going to be watching over the next couple of weeks. So as far as the Dow is concerned, that finally got up to the 343 level. We've been talking about that for a long time. Never quite got here in May. We got May 1st. We got very close, 342.59, and we pulled back and then rallied up and hit the 345. We'll just give that the upside bias, that double top for now. That's really all I see for it. The Russell 2000, not a terrible pattern here, just sideways consolidation. This can still get to 192. I believe I told you that last week. And again, that's that red bar high right there, 191.74, right in that range is where I think it wants to test. But right now, Russell hanging in there. Okay, and again, if this gets a little bit more money flow, you can see some more of a rally here in general equities as tech potentially cools off. So something to keep in mind moving forward. All right, over to the SMH. So the semiconductors holding up. Did back off a little bit Thursday, Friday. Again, maybe might just be somewhat OPEX related. Again, lots of rebalancing going on, end of quarter stuff here. This is still into a lot of resistance, but again, it's also very overbought. But again, holding up well. As long as the semis are holding up, it's generally a good sign for the market. But it is into a lot of resistance, so I don't see that much more upside here in the near term without some significant backing and filling. Cloud software here, IGV continues to be a powerhouse, mainly led by Oracle. So they had earnings, reported gap up, gap and crap, and then right back up Wednesday, Thursday, and then just a little bit of a back off on Friday. IGV into a pretty good resistance level. So again, that pivot going back to April of last year, we basically kissed it, and then we pulled back there. So that is in to some resistance as well. So we'll see. Maybe that can start to do some backing and filling here. Again, tech very overbought and extended, as we already know. All right, transports did get a nice bid. This wants to go to 15.2. We got to 15,000 just about on Friday, and then we pulled back. So there's your pivot. And I'm getting 15.2 from this weekly red bar. It's pretty much that simple, 15,195. That's where it likely wants to test. That's really all the upside I see for it at the moment. But nice pop there for the transports, and they needed it, right? So we had a potential head and shoulder top here in play, and we pushed through that wedge, and we were able to confirm above that. So that is a nice move for DJT there. Again, give that the upside to 15.2. We'll say maybe 15.250. All right, let's get over here to interest rates. So this is interesting to me. So again, the market right now, you have Fed funds futures essentially basically pricing in cuts later this year. Powell saying there's not going to be cuts for a long time. Right now, you just have to, you have the bond market, right? The Fed funds futures saying that there's going to be cuts, but the 2-year seems to be saying there's going to be hikes. And again, we talked about this, you got through this pivot. This wants to go to 5. So this is going to go test 5%. Now the Fed has paused. So we're at 5 to 5.25 on the Fed funds rate. If this starts to get back above 5%, the Fed's not going to be able to. Now, a lot of people are saying the Fed pause precedes a pivot. And that has happened every time. The thing here is now, I believe that they paused because of the TGA refill. They're going to want to give the government a better deal on those interest rates. That's why I think the real reason for the pause is. But so we'll see. The 2-year right here is essentially saying the Fed's going to have to hike. I mean, it's pushing up. This is a decent chart pattern here for a move back to 5%. If you get above 5%, the Fed, I'm sorry, they're not going to be able to cut. It's really that simple. But right now, the Fed did pause, so that does give the 2-year room to push. I believe it's due to the TGA refill. But in any case, Fed funds futures pricing in cuts right now. We'll see who wins out. In any case, 5-year, that again looking good. 10-year also as well. If you get it through this pivot, that's headed back to 4 to 405. And then the 30-year here, if you get through 4, this is going to 420. So rates here still looking pretty good, and I don't see any problems for yields at this current time. But anyways, let's get over here to housing. XHB making new 52-week highs. Did close a little bit down on Friday. Nothing terrible. That can still get to about 78. ITB holding up as well. That can get up into, we'll just call it double top there. So 83 and change on the ITB. What an amazing run there for the home builders. Continuing to defy gravity here. And then VNQ, general real estate. Not a terrible pattern here. Little inside bar action. It did close back below the 200 moving average on Friday. And again, I don't really like the weekly chart here, but it's holding up okay, and we'll just leave it at that. XLF here over to financials. That was down about 0.25% on Friday. Again, just some backing and filling. It was able to close back above the 20-week moving average, but not the 50. So again, still you can make a case here, down move, and you're kind of sideways. This could still be a weekly chart bear flag on XLF. So XLF's going to need to catch up here at some point if this rally is going to continue. So financials definitely weak. I know regional banks, they've cooled off. We haven't had any bad news. But these guys, they need to do equity share dilution, and they can't right now because shareholders will understandably freak out. And they just don't have the capital right now to do anything. And, you can't. Yes, they're up, the KRE is up 30% off the low, but it's still down 50%. And you can't really do an equity share dilution when you're trading at, sorry if I get my weekly chart here. There we go. If you're trading at, 3-year lows like this. So they're kind of in a bind here. Still not a terrible pattern here on the KRE for a pop to 46, 47 in the short term. But again, just that overarching problem still remains there with the regionals. There's the big banks there with the KBE. That can still get to 39.40, no real issues. Broker dealers here got to my 475 level. We'll say 490 for right now on that, but they've had a nice recovery off of the lows. All right, let's shift gears over here to commodities. So crude here, still just in a choppy range, just backing around here. If you get below 67, then it's down to 64. So we'll see what it does there, but I'm not in love with it. It's just kind of been in a range right now. I think there will be a good buying opportunity later this year, but I don't think we're quite there yet. For crude, for XLE, not a terrible pattern here on the daily. For another advance here, I just don't love the weekly right now. I think you'll get a better chance to enter some of these names later. Again, in the oil space, XOP, same thing. Just kind of choppy, sloppy pattern. I think that wants to test 100. And then OIH holding up much better, but no close. Remember, we've been talking about this. 280 is our big level. Never quite got above that on a weekly close. And we did technically reject that 20-week moving average for now, but this is definitely better of the three between XOP and XLE and OIH. Natural gas, big pop here. Actually doing this video on Monday here, so futures are open, and it's actually getting a bid right now, trying to challenge this little micro double top 268.5. We're just off of that level right here. Had a nice little trend line breakout, and we talked about this for weeks here. We got the higher lows now and higher highs for the first time since really November, December, and you get through that, then it's up to 3 to 350, and then that's really kind of your next big level there. But nat gas finally putting in a nice rounded bottom, and that looks to be set to take off for the second half of the year. All right, over here to the dollar index. So the dollar did back off this week, and we closed below 102.75. So near term, I got a little bit of a bear bias here on the dollar because we lost that nice weekly. You had that nice weekly bull structure there with that green bar. It had a nice pullback pattern starting to form, and then we closed below that. I never like to see that. So short term here, we're bearish dollar. We'll see what it wants to do. I think maybe it wants to, we talked about this for a long time. I said it probably wants to get down to 100. Maybe it wants to get down there after all, maybe pierce it a little bit. So we'll watch and see what the DXY does here. But definitely a sign of weakness. Now, if it firms up, then, I'll let you guys know. But right now, that's definitely a sign of weakness to see it lose that weekly support level. So dollar, DXY under a little bit of pressure here. Over to gold. So gold is continuing to chop around. And it's kind of stuck in this range. I still think it needs to go test 1900. I think that's kind of what it's doing here, setting up kind of a weekly base for a push down. So we'll see what it does there. Still above the 20-week moving average. I think once you get below that, that's when it needs to go test 1900, and then possibly 1850. But outside of that, gold really just kind of stuck in a range, nothing really doing right now. Same thing with silver. Silver shaping up a little bit better here. You do have this nice little pop from the 8th, and we're just kind of inside of that. So this could be setting up for a push to 25. Yeah, we'll call it 25 and change for right now. But pattern's a little bit better here, but again, still kind of in a choppy range. At the moment, platinum also backed off quite a bit this week, and that tested 960. That may need to go a little bit lower here. We'll watch pattern. We'll watch for pattern on that. Palladium testing 1300 and then getting a nice pop. I want to watch this one for pattern as well. We'll see how that reacts. I think 1300 is a good level for it, but I want to see how the pattern shapes up here in the future before we start deciding on that. And then copper here, getting to the 390 level. We talked about that for weeks. We'll see what that does. I still think that needs to go down and test 340, but it's holding up for now, so we'll leave it at that. All right, shifting over here to uranium. Let's get to Camco first, as always. Again, continuing to hold up. Nice pop Monday, and then just kind of inside bar there. This does a little bit more backing and filling. You let the moving averages catch up on the weekly. This is going to push a lot higher. Same thing with URNM. Been talking to you guys about this for a while, right? Said we got to close above 34.22. We did that on a weekly close. So if you get weekly consolidation now, this can be longed. So URNM holding up well. Nice reversal. I like that you broke above that red bar and closed above it. That's a big step there for uranium, and I think it's starting to shape up very well here, in the uranium market. Anyways, over to commodities here. DBC first. Nice pop. So again, hit the low. And by the way, wheat. I don't really cover wheat that often. I like wheat down here. This had a nice reaction. Take a look at this level. Big monthly chart level on wheat futures, and look at that beautiful reaction there on ZW. So big move there, all the way to test it all the way up to 700. I think this wants to go to 8. Won't go there in a straight line, but yeah, big move there for wheat. But in any case, DBC getting a nice bid and closing back above that level on a weekly basis. So decent sign of strength there for now. Still has more work to do, but it's definitely shaping up a little bit better here. Mosaic had a green week as well. So some of the potash names, I like this pattern here. So we talked about this level. I said, look, it might take a few weeks to get going, but we came down here, pop, and now we've got an inside bar. So this can get up to, 39, 39.50 here in the near term. I don't hate that pattern. NTR, same thing. That probably wants to get up to, we'll call it 64. And then Intrepid, we'll say 25, we'll say 24 to 24.50 for now. So the potash names can get a bid this week. And I like the reaction as well as the ag names. And again, wheat, I think is very interesting down here as well. So those names are starting to shape up more. All right, lastly, let's get over to Bitcoin. Okay, so Bitcoin sitting at 26.5 currently. We had a little bit of a breakdown earlier this week and then was able to bounce. I still think the best level here on this, if you want to go long, is about 23.5. And we're just going to take this little head and shoulder top here, if I can draw it in. And we take that and copy it to the breakdown. So right about 23.5. That also takes you just, basically a pierce of the 200 moving average. Right now, it's not terrible. You got a little green bar there and you're consolidating. Nothing to say it can't go up here and test this red bar at 27.5. But I think if you want to take a high percentage play, that's where I would take it, right in this area. So that's what I'm looking for on Bitcoin. If it doesn't get there, it doesn't get there. But that's really the level There we go. That's the level that I'm watching there on Bitcoin, if and when it can get there. All right, again, lastly, over to the spiders here. So just be aware, we've had an amazing rally, but positioning has changed. Hedges are now off the table. And again, the kind of fundamental forces have not gone anywhere. To me, this is more of a short squeeze. Everybody kind of seeing the writing on the wall, and everybody being bearish in March, and for good reason. The problem is being early. These things can happen. So that's the way I see it right now. Can't take anything away from the rally, but bears do have a window here. We'll see if they can do something with it. Moving forward, the markets are overbought and into resistance. They've been able to hold up so far. We'll see if they can continue to do that moving forward. Anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you guys all next week.